The American Recovery and Reinvestment Act was signed into law on February 17, 2009, allocating $787 billion to spur economic activity. The first contract awards under the Act were made the very same day. A number of steps are required to move the recovery funds through the government to the recipients. In writing the Recovery Act, Congress appropriated funds for specific recovery programs administered by the 28 federal agencies designated to distribute recovery money. Funds were also appropriated to these federal agencies in lump sums to be applied to the agency's other programs. The federal agencies then distribute recovery money either to state and local governments for contract, grant, and loan awards, or directly to academia, businesses, and organizations. Recovery funds are also provided to individuals through entitlements and tax credits. The $787 billion is dispersed in three ways: $288 billion in tax benefits, $224 billion in entitlements, which are direct payments to individuals, such as Social Security, and $275 billion in federal contract, grant, and loan awards. For our purposes, we are going to focus only on the $275 billion in contract, grant, and loan awards to recipients. For the majority of federal contracts, businesses, organizations, individuals, and other entities participate in a competitive bidding process. From the Opportunities tab on recovery.gov, go to Contracts and scroll through Recovery Contracts up for bid, or go to FedBiz Ops to see all federal contracts up for bid. Recovery contracts on FedBiz Ops are designated by the Recovery logo. Recipients of federal contracts are paid as they invoice. For example, Company A bids and wins a $10 million contract for a road construction project. As the project progresses, the company invoices and is reimbursed. On completion of the project, the company invoices for the final outstanding amount. Federal agencies also distribute funds through grants. From the Opportunities tab on recovery.gov, go to Grants and then to grants.gov to see and apply for federal grants. Grants are awarded only after an application has been approved by the federal agency. Grantees are paid through the following process. The grantee provides financial information to the awarding agency, which then determines whether to pay the recipient by drawdown, which is essentially an advance payment to cover expenses provided under the grant, or to pay after the grantee has invoiced for expenses. Federal agencies also distribute recovery funds to the states for contracts and grants that are awarded by the states to academia, businesses, and other organizations. When a state receives notification from a federal agency about the amount of funds it is to receive, the state selects projects to finance with that funding. Once projects are selected, the state issues a call for bids from contractors to carry out the projects. The winning contractor, now a recipient of recovery funds, is paid only after invoicing for work done or materials purchased. States may also issue grants. Recipients receive grant awards as a result of an application process overseen by the state, which decides how to disperse the money to recipients. Each state has its own process for dispersing funds. In addition to contracts and grants, recovery loans are distributed to recipients. There are two types of loans. The guaranteed loan. Banks apply to the appropriate federal agency for these loans, which are managed directly by the bank. Applying for a loan is the same for a recipient as for any other loan applicant. In the case of a guaranteed loan, if the borrower defaults, the federal government repays the bank. Direct loans. Usually available from a federal agency, most likely the USDA, the Small Business Administration, and the Departments of Education and Energy. Information about these loans and application forms can be found at the agency's websites. When prime recipients receive recovery awards, they may award part of a project to another company or purchase goods and materials for the project. These subrecipients may perform the work in or outside of the prime state. There are two scenarios for recovery funds moving from a prime recipient with a contract to a subrecipient. A prime recipient receives an award to perform work in a state and hires subcontractors and buys materials in that same state. The recovery funds stay in the one state. Or, a prime recipient receives an award to perform work in a state and hires subcontractors and buys materials in several other states. The recovery funds are now distributed throughout one or more states. The methods described here are, in general, the way most contract, grant, and loan awards are distributed to recipients.